Clients may have immediate financial constraints, and what this means in English is that basically they may say that, okay, I don't have money now. So to clarify, it's not that the client has stated unwillingness, but rather that they have other priorities that they are looking at, and they may not necessarily want to involve you in the decision making, partly because it has already been decided or it's extremely personal. So examples of this are the most common example of this that I can think of is when a client is about to get married and you are talking to them about long-term savings or investment planning, right? The client is facing a new life together with their partner, right? Which is also a very, very personal concept to them in how they manage their time in the future. They are also facing the costs that are associated with getting married, such as the wedding, the renovation of the new house, the cost of having acquired a house, and the honeymoon, amongst other things. So the majority of these you can see are short-term expenses, and because these are such personal decisions that tend to be discussed within either just between himself and his spouse or with their family in relation to stuff like the wedding, so on and so forth. So getting another person involved may feel very redundant or very troublesome, and they may also be extremely dissuaded from trying to do anything that is for the long-term future or making any kind of long-term commitments, right? So because they are worried that maybe they may not have significant amounts of cash for a couple of years, and obviously there are penalties for if they can't carry out long-term products, right? So more often than not, financial advisors will accept that, like we can just leave it alone for a while. And even on my end, I tend to do this depending on assessment. But what you may want to do to kind of address this is that you should emphasize the importance of both the short and long term. Means that there are going to be periods of life that, even though they may not be as intense as this period, but there are going to be periods of life where your short-term needs are going to be extremely, extremely concentrated. And it's not good to put aside long-term on a permanent basis or semi-permanent basis just because you have a lot of short-term needs going on. Investing for the long term should be consistent so that you can generate as much wealth as possible, right? There are obviously certain things that you cannot compromise on just because you have short-term needs, such as retirement, because if you consistently have short-term needs, eventually you'll find that by the time you get back to your retirement planning each and every time, you would have either significant opportunity cost or you may not even be able to retire at all, which, as a stated example, you could suggest that the majority of the generation before us, or a generation you should be able to come up with a day-to-day example of how this is the case. I would say that most of our parents, if you're around my age watching this, would have made similar sacrifices. Yeah, so it's important to stick with the very specific rules on long-term planning, which is usually you want to invest or save at least somewhere between 10 to 20% of your income for the long term regardless. So hopefully you can still get a case in that particular situation by reminding them that it's not healthy to be in a situation where you could force your children and your future loved ones to have to fund your long-term needs since you didn't put them as a priority during such periods. Yeah, you should always save, invest first, and then spend later, right? Now, the alternative to that is obviously in relation to prioritization, which means that what you can do is that as a financial planner, what you will do is maybe help them with this process on a financial level. If you don't need or want to know the details, and most clients can be a little uncomfortable if they don't know you very well. So let's say, for example, they are planning for their wedding in 2 or 3 years, right? Are there any products which you can use to help give them a little bit more value? What I like to describe to clients personally is that I tell clients, listen, you don't have to tell me about how huge your wedding is. If your wedding is 100K, I don't want to know where it is. It's not that important to me. I'm not judging you for spending 100K on your wedding, even though I am kind of internally judging you, but I'm not saying it, right? But what's more important is, can I help you? So if you are putting aside 50K and I help you invest, does that mean that I can get you a little bit of interest that is going to help you get another table at your wedding? That's a very good example of what I like to describe, because a table at your wedding is $2,500. On a $50,000 savings, that's about 5%, right? So can I get you that 5% in 2 or 3 years? Possibly, right? And so that is something that will catch the attention of a client and make them see that, okay, I can trust you in the short term, and eventually I can trust you in the long term. Yeah. Aside from that, you can also consider flexible payment options, right? So there are certain credit card or bank deals that will allow your clients to fund investments structures that they may not have money for. Means that if it's a matter of getting large amounts of money upfront, perhaps there are some ways which you could design it such that they are able to invest larger amounts upfront and then pay it off monthly later, so on and so forth. Try to see how your banks and your managers can help your clients to cope with their financial constraints.